Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, April 23rd, 2012 is sponsored by Realtik. All right, let's get right into the mix, guys. Markets are near the highs of the day, although they are still down significantly here. We have the Dow down 120 points, NASDAQ down 31, S&P down 12, basically a 1% drop across the board. Why is the market selling off today? Essentially, it's because of Europe. You have a major election possible upset going on, which is not good for the euro in France. In addition, the Netherlands had their whole cabinet resign, essentially the whole government there, getting into trouble based on austerity measures not getting passed. And you still have Spain, which the yields continue to creep higher. It is continuing to be a major thorn in the side of the euro right now. All of these issues coming up over the weekend, all of them causing the U.S. markets to fall based off of what is happening in the European markets. All right, so that's the basic summary there. You also got some data out from China that was not quite as good as expected, but nonetheless, it wasn't horrible. It's more of Europe, a European issue at this stage of the game. All right, now let's take a look at the intraday chart. You can see the markets initially opened here with a pretty solid gap down. You gapped down below Thursday's low here, and if you look and zoom out on your charts, I want to show you this. There's a trend line which connects this pivot low to this pivot low, which you pierced, but you've now recaptured. That's short-term bullish for the market just based on an intraday analysis technique. And again, the fact that we were below and we're able to get back above that line does show us that we are, at least with the small chance of holding steady here. In addition, it's actually a larger head and shoulders pattern. Let me just show you what I mean by that. If you look right here, here's your shoulder, here's your head, and here's your other shoulder. Okay? And again, I'll draw that in for you. So this is your neckline of the head and shoulders pattern, and that is ultimately what you're watching to see. A close below that would be very detrimental to the markets. If the markets can stay above it, they have a chance of continuing to see a bounce. But once you get a daily close, if you were going to close at the end of today or tomorrow or Wednesday below this line, watch out below, in my opinion. This market will get hammered much, much more to the downside. And again, the market will continue to go down. We've nailed the turn date perfectly with the rounded top and collapse. And again, the cycle date does tell us that the markets have more downside before we bottom out and make a big move up again. All right, and that's what we do here at In the Money Stocks. We project out, folks. We give you swing trades. We give you day trades. We give you everything you need to know to make money on any side of the market. I don't care if it's up or down, left or right. You will be on the right side of the trade based on our proprietary analysis. And again, there's a 7-day free trial here at InTheMoneyStocks.com. 7 days free. The Research Center is what you're probably going to focus in on. And again, that's for swing traders. All right, swing traders and investors are all about the Research Center. And ultimately, if you want more day trading, intraday live calls, you want to analyze the Intraday Stock Chat and join that 7-day free trial. Okay? All right, so in any case, folks, let's see what we have here going on. Aside from that, if we flip over to a couple charts, Apple's been a wild trade today. Right now, it's only down 60 cents. The average person that's looking at the quote on Apple right now at lunchtime would probably be like, oh, no big deal, Apple's really not doing much. But it did sell off sharply here and has rebounded to the flat line. And remember, Apple has earnings tomorrow, plus we have a 2-day Fed meeting Tuesday and Wednesday. We'll get the Federal Reserve to come out and give us their pinpoint analysis on what's going on. Obviously, they're not going to change interest rates, but it's a matter of their language on QE3 that could be a big news out for this market, and that'll come out again Wednesday at, I believe, around midday, and then the press conference, since it's the first one of the new quarter, will be around 2:15 p.m. Eastern Time. But again, Apple, a wild trade today, that's for sure. If we take a look at a couple other key stocks out there, Google, which was negative early, has come back to the positive side. And you can see the markets have floated up off their lows. However, Amazon's still negative. We're still seeing Microsoft under pressure. IBM is under pressure, although I will say IBM did hit a key support line here on your daily chart. If you look at your daily chart of IBM and you notice this, see all these lows right here of the consolidation, that's telling you there's support there because it was hammering on that and then ultimately went higher. Take your lows, draw a trend line right across, and you actually get a beautiful little pivot low support from the low of today on this stock. So very nice little support area there on IBM today. That's support number 1, and it was at 197.80 given to the intraday stock chat as the key level there. All right, taking a look at JP Morgan, one of the stronger stocks out there. It had an ugly gap down, but came back with a vengeance. And again, JPM did get a nice boost off the lows. It gapped below the 50 moving average, but again has turned to the positive side. Much like Apple was positive and now it's flipping between the positive and negative. Google was negative and now it's positive. And a lot of the leaders like Exxon's having a very, very strong day. If we punch in Exxon Mobil, you can see it had a big gap down and then moved up. If we go to the intraday chart, look at this. I mean, it opened all the way down here and it traveled all the way up. So, I mean, it did have a nice little move there on the chart. All right. Let me just see what else we want to talk about here on an intraday basis, folks. Let's go back to the spiders and take one more look. Spiders are still continuing to surge up. We just made a new high of the day. Notice the trend line, and sure enough, right off the trend line, you pull back. But again, a very nice move on the SPY there. All right, if it continues up, you're going to look at your next place if it takes out the blue line for the 50 moving average. 50 moving average will be your next key resistance level. Okay? On that note, let's quickly take a look at the dollar. The UUP is up 8 cents on the day, which is the dollar tracking ETF. But notice how the dollar has slowly faded today from the highs put in around 10:30. Now, what do we notice about the dollar? Well, as the dollar declines, the markets float up. As the dollar goes up, markets go down. So look at the market here, or I should say, look at the dollar chart, how it surges up into 10:30. Look at the spiders chart in comparison, and you can see into 10:30, what happens? The markets sell off and make their low. As soon as the dollar makes its high of the day, the markets begin to rally up as the dollar falls. And this is a classic dollar trading action on the overall market and how it influences the overall market. All right, on that note, folks, I'm going to get back to trading. Way too much money to be made here in the afternoon session. Come take the 7-day free trial to the Research Center. Come take the 7-day free trial to the Intra Day Stock Chat. Try us out. Make money. Profit with the pros. Become one of the elite. Never worry about ever being on the wrong side of a trade. We will discipline you, make you into an elite trader. Whether you're a swing trader, investor, or day trader, you will be one of the elite here at InTheMoneyStocks.com. Take care.